Bloomberg Audio Studios.
Podcasts, radio, news.
Robert Dahl joins us right now this morning. Bob, thank you so much for joining us. How do you link price down, yield up into a belief, a conviction in the equity market?
Hard to do, Tom. The market has been fighting several issues, but it's got a new one. The bond market, although bond yields have been creeping up, as you know, inflation concerns, tariff concerns, and sort of the 460 level on the 10-year and the 5% level on the 30-year, which we've now broken, have been technicians' nightmares. We've crossed one, will we cross the other? Not just a hurdle for stocks, particularly at these valuation levels.
But Bob, you and I are enough of a fossil. A credit all weekend, starting with the Secretary of Treasury, I got, it doesn't matter. Are you kidding me? Back to 1917, 17, World War I, Moody's has been looking at this. To me, it was like, am I wrong, Bob? This was like big news, right?
Absolutely. Look, some would say this is the third credit agency to downgrade. What's the big deal? The big deal is the bond market, and the big deal is the bill that's sitting in Congress that's going to exacerbate the deficit yet some more. So as long as those things keep happening, we will be decreasing the number of degrees of freedom we have to fix this thing before it really strangles us.
Bob, a lot of people will come into this studio and tell Tom and I that, hey, as long as investors, both domestic and international, continue to show up and buy U.S. Treasuries, it just doesn't matter. What do you say to them?
Well, if they're going to keep buying them and the level's not going to change, I guess they're right. But the problem is the interest rate's going up. We've got an economy that is slowing down. We have inflation that a lot of people want to argue has been solved. And why are bond yields moving up? Because we haven't solved the inflation problem. Because we've got, look, the alternative is the biggest tax increase in U.S. history on December 31st. So that's not a pleasant alternative, simply to say no to the bill that's sitting in Congress. We've got a lot of work to do. I'm going to have the longer we wait, as you know, Paul, the fewer choices we're going to have.
So, Bob, given that backdrop here, what kinds of discussions are you having with your clients as it relates to stocks, bonds, alternatives? Where do you go here?
Yeah, okay, with great difficulty. Look, I think you can still buy on weakness, and we've had a lot of strength in the U.S. equity market. So you're hearing me, I'm a bit cautious. We get a few days like today, and some prices will get interesting again. The PE ratio in the stock market, as you know, got down to almost 18 in the tariff sell-off. But now we're at 21, 22. Not that 18's cheap, but 21, 22 is certainly expensive. So you just have to be cautious. You have to focus on companies that have strong free cash flow, that have improving return on equity, so they can weather these valuation storms.
Bob, one final question. We got to run with all that's going on, particularly in Europe. Bob Dahl, we got a higher real rate. Does that just make it harder to do business? Or is it ambiguous where a higher real rate shows the spirit of the American corporate economy?
I wish it was the latter, but sadly, in reality, it's the former. It just makes it tougher to do business. And, you hear like the jawboning of Walmart. They have to run a business with low margins. If they're going to have cost increases, they're going to increase prices, period, full stop.
Bob Dahl, thank you so much.